Okay, the presentation mode. All right, so sourcing analytics. Right, sourcing is not just about negotiation, right? It is heavily data-driven, right? Now, this is true because think about a company, right? Typically spend hundreds of millions of dollars on hundreds of thousands of SKUs from thousands of suppliers, right? Just look at share volume and number of POs, right? So rationalizing and managing suppliers, right, require intensive data analysis. And meanwhile, right, new suppliers and new products and services may emerging all the time, and corporate changes, right, such as merger and acquisition and bankruptcy, right, happen constantly. So companies need to frequently adjust its supply base by selecting and identifying new suppliers, right? So in some sense, right, sourcing is all about analytics, right? So data analytics can help companies, right, can provide the insights and intelligence, right, for companies to make sourcing decisions. Right, let me start with the iPhone story. Right, iPhone was extremely successful. Right, it was introduced by Apple in year 2007, and from 2007 to 2010, Apple made $27 billion with a profit of 15.6 billion from iPhone. Right, now, iPhone's success was partially due to its global sourcing strategy. Right, Apple designs and sell, right, iPhone but manufacture nothing. Right, the manufacturing was completely outsourced, right, to Samsung, let's say for processor and flash memory, right, to Intel for wireless flash memory, for Infineon, right, that's for the silicon contents, and Epson, Sharp, and Toshiba, right, for displays. Right, so the manufacturing cost was controlled so well, right? It was below $266 with a retailing price of $599. Apple's margin of iPhone is $333, which is about 56% of the value of the selling price. Now, looking at its suppliers' profits, right? Apple made 56%. Its suppliers didn't really make much from manufacturing iPhone, right? Korea's profits, including Samsung, right, it's about 4.7% of the iPhone's price. Chinese labor is about 1.8%. So with such a meager profit and also the huge potential of the market, right, Samsung Electronics soon came downstream, right, and become a competitor of iPhone, of Apple, right? So Samsung introduced its own smartphone, and using its integrated supply chain and low cost advantage, right, it soon take over the global smartphone market, right, from Apple, right, in terms of units sold. So now for Apple, right, the question is how to continue success, right? Meanwhile, there are many new suppliers with new products coming out, right? So which provides Apple actually new choices and opportunities, right, for finding new suppliers for these critical products, for these critical components, right? So the question for Apple is, right, how to do it right for this year. Okay, so data analytics or sourcing analytics can provide insights, right, and intelligence, right, to help Apple to make sourcing decisions and also better negotiate with the suppliers, right? So what Apple have to do, right, 3 steps, right? First, identify the company's needs and supplier selection criteria. And second, analyzing supplying markets, right, to identify and select potential suppliers, right, using market intelligence. And finally, right, using supplier analysis and bargain power analysis, right, to better negotiate and bargaining with the suppliers. Okay, so if Apple did this way, then Apple will know itself and its suppliers, and it will never lose a bargain. All right, let's first talk about how to identify companies' needs and select and supplier selection criteria, right, which need to be matched with the company's strategic objectives. Now, there are many things, many analysis you can do to identify companies' needs. And here, let me just name a few that is most important, right? We can first do company analysis, right? Plotting a profit versus cost analysis, right? For the US IT industry, right? These are all the IT companies headquartered in the United States, right? The y-axis is the profit, which is the operating income, and the x-axis is the total cost, right? We can see that in year 2020, right? Apple has the highest revenue and cost, but it doesn't have the highest operating income in absolute value, okay? And Microsoft, right, actually has more operating income than Apple, with about half of the cost, right? We can also see that Google is here, right? It's pretty big, right? But it's not as profitable as Microsoft and Apple, right? It's actually below the regression line. And Facebook, right, is very profitable, way above the regression line. It's of course much smaller, but if you look, it spent about 1/3 of Google's cost, but made almost, let's see, a profit that is close to Google. Now, what about IBM and HP? Right, they were performed not very well. Right? Their size is small, and they were barely profitable. All right, now let's look at a revenue breakdown, a cost breakdown of the revenue, right? A revenue breakdown of the technology hardware companies in the United States. Okay, if you look at industry average, the cost of goods sold is about 66%. And Apple is doing great in this sense. Apple's cost of goods sold is only 62%. Right? Apple is outperforming the average company in this industry. But still, cost of goods sold is the major cost driver, right? It's more than 50% of the revenue. Right? Now, if you look at HP, HP's cost of goods sold is 80%. It's 82% of its revenue. HP does not really look like a technology company with high value added. Right? Now, the problem of Dell, right, is its sales general administrative cost, right? Now, its sales SGA cost is almost doubling the industry average, right? So for these companies, the priorities are slightly different, right? For HP and Apple, right, the priority is still the cost of goods sold, but for Dell, right, it is SGA cost. Okay, now, long story short, right, for critical components, right, such as CPUs and memories, high-tech products, right, supplier selection criteria should have the following 3 dimensions. Right, the first is technical capability, right? The supplier should be innovative, right, technically and engineering capable, that is high value added, right? It should also have sufficient manufacturing capability and high quality. Right, the second dimension is cost, right? Remember, cost is still major drivers, right? Cost of goods sold is still major drivers, right? So the supplier should offer an attractive pricing to Apple. And even with that pricing, right, the suppliers would still be very profitable. So it can sustain that pricing, right? Now, ideally, right, Apple should have bargaining power over the supplier, right? This has implications on cost, of course, right? And finally, right, the supplier should be financially healthy and robust, right? You don't want your critical component suppliers to bankrupt, right? In a near time soon, right? So you want them to be financially healthy. They can continually provide good price, good products to you. And also, they should not leak sensitive information such as intellectual property, and they should not become a competitor, right, to you in the future. Right? These are just some highlights, right? Some high-level guidelines about supplier selection criteria for high-tech components. All right, now, so let's first use market intelligence to analyze the supply market, right? To identify potential suppliers. So where to look for CPU suppliers? So let's look at a map, right? Let's look at which country has the highest output or revenue, right, of semiconductors. So we can see that United States, clearly, right? China, Japan, Taiwan, Korea, right? And some other countries as well. A bar chart actually provides a better picture, right? We can see that United States is clearly the number one, right? Far greater than everybody else, right? This is followed, US is followed by Taiwan, right? Amazing, right? And China, Korea, right? Japan, Germany, Switzerland, Netherlands, and Canada. Now, we can also look at the revenue growth, right, for these countries, for the semiconductors in these countries, because which implies the growth potentials. Now, I have to say that usually high revenue countries do not have high growth because they are big, right? But here we have two exceptions, right? Taiwan and Korea, right? These two regions or countries among the largest economies, right, of semiconductor, and they're also among the highest growing economies of semiconductors, right, which is amazing. All right, now let's look at market competition analysis. So we want to look at each country, right? How competitive are these markets? Right, we also want to look at the major players in these countries and also their stabilities over time, because we want a stable supplier. Right, so let's first look at the US market, right? US semiconductors manufacturers. Right, so first we notice that if you look carefully, right, the market is becoming increasingly competitive or less concentrated. Right, because if you look at the market share of the biggest, right, companies, actually it's shrinking, which is a good thing. That means the market is becoming more competitive, right? So, and for the biggest ones, right, their market share is relatively stable, right? So the whole market is quite competitive with a few big whales and many smaller fish, right? Many smaller companies, right, down here. Now, if you look at their net income, it's actually more fluctuated, right? So first we can see that, right, Intel and Texas Instruments, right, still have quite stable income throughout these years, but Micron had more fluctuations. Sometimes it makes a lot of money, let's say in year 2018, but some other times it doesn't make so much money. And if we look at Qualcomm, right, Qualcomm had a negative net income in year 2018, while it's making profits in other years. Right, so Qualcomm has net stable income over these years. Okay, now let's compare US market, right, side by side with the market, with the semiconductor market in Japan and in Taiwan and in Korea. Right, clearly we can see that US right, has the largest and also the had the largest, right, semiconductor industries in the world, which is also growing very fast, right? That's the green line. And if you look at Taiwan, which is the red line, right? Taiwan is on the rise. Taiwan's semiconductor industry is on the rise, both in terms of total revenue and the operating incomes and so on. But Korea's picture is more mixed, right? It's growing more recently, but it was fluctuating a few years back. Okay, so let's suppose we select semiconductor suppliers from the US, from Taiwan, from Korea, and Japan, right? And let's rank, right, the semiconductors companies from these countries, right? Let's say together we can see that and pick, suppliers from them, right? For example, we can pick Intel, right, which is #1 in revenue, and Taiwan Semiconductor Manufacturing Corporation, TSMC, also, right? And we'll pick Qualcomm, and down here, just for diversity, we'll pick Global Foundries, right? Let's say we pick these 4. Of course, we can pick other companies for different analysis. It's up to you. And here, let's focus on these 4 companies because they represent good varieties. Now, in addition to these 4 companies, we also look at Samsung Electronics. We also use this company as a benchmark because it used to be a good and reliable suppliers for Apple. I just use this one as a benchmark. Okay. All right. So now let's look carefully after identifying the potential suppliers, right? Now let's analyze these companies, right, carefully to look at their technical capability, their pricing, and their profitability and their financial health. Okay. Now the objective of the supplier analysis, right, is twofold, right? To identify the best suppliers meeting the criteria. And also, we're going to use these insights and information to support negotiation and bargaining with these suppliers. Right, essentially, we're going to do 2 things, right? First, we look at the pricing, right, and profitability analysis. That is, we're going to look at the zero value added technology. And so what's their pricing? Will they offer attractive pricing or not? Right, and how profitable they are with that pricing. Now, we'll also analyze their financial health, both short-term and long-term, to understand their liabilities and risk. So will they bankrupt near time soon, right? Okay. Now, for pricing and profitability analysis, so how do we measure a company's technology or value added? Usually, a company with high value added technology, right, will price its product very high, right? Which means it's going to have high gross margins or lower percentage of cost of goods sold, right? So if we just look at the gross margin, right, sometimes it will tell us, right, if the products is innovative enough or if the value added is high or not. Now, to look at their profitability, we'll have to check out their net margins. Essentially, we're looking at both gross margin, right, and net margin, right, to measure their technology and profitability, right? An ideal supplier would offer you attractive pricing. That is, their cost of their gross margin will be high, right? That means they're not selling their product at a very high price. But even with that price, right? Even with that good price, they are still very profitable. That means they have high net margins. These are the ideal suppliers, right? Lower gross margin, but high net margin. Sounds contradictory, right? But if you can find a supplier with that kind of data, right, that supplier could be very attractive. And meanwhile, right, we also have deceiving suppliers, right? These suppliers might offer the buyers attractive pricing, but they can barely make money from it, right? These suppliers are deceiving because they might look good initially, right? But in the end, they may go bankrupt and you still have to pay. And that's why we call them deceiving suppliers. Right, so I use this Mission Impossible picture here just to show you, right? To find ideal suppliers is challenging because these suppliers have to balance, right, gross margin and net margin, right? They need to have a low gross margin and a high net margin in the same time, which is very hard to achieve. Okay, now let's come back to the Apple story. Right, let's compare these selected, right, these potential suppliers side by side. Right, they are Global Foundry, Intel, right, Qualcomm, Samsung Electronics, and TSMC. Right, just by size, we can see that Samsung is the biggest. Right, that's the orange line here. Now, this is not surprising because Samsung now produces not only semiconductors but also technological hardware and consumer electronics, right? So it has a wide range of products to offer, right? Now, so Samsung is followed by Intel, which is the second largest, right? Then TSMC, Qualcomm, and Global Foundries. Now, if you look carefully, Global Foundries, which is the blue, actually lost quite significantly, right, in year 2020. All right, now let's look at these companies' profitability. So here we have both gross margin, operating margin, and net margin, and also return on assets. Right, like we said before, right? Global Foundries lost significantly, so it is the smallest, right in the middle. And the next smallest is Samsung Electronics. Right, like we said before, Samsung Electronics also produce, household appliances, which has much lower margin, right? That makes sense. Now, if you look at the rest, right, which is Qualcomm, TSMC, and Intel, right, they are in the outer space, right, of this picture, right? They are somehow together, right? Their gross margin are in a range of 50 to 60%. So, which means they are quite innovative. Right, this is for high-tech products. Such gross margins is typical, right? And if comparing these three companies, right, you can see that TSMC have the lowest pricing, right? Let's say gross margin here. Actually, highest gross margin. I'm sorry, lowest gross margin, right? And also the highest, right, net margin. So let's now look at the revenue breakdown, right? So it's going to provide us with more information. Now, first, let's compare the semiconductors in Taiwan and semiconductors in the United States. Now, US price much higher than Taiwan. Why do I say that? Because if you look at the cost of goods sold, right? Taiwan semiconductors, the cost of goods sold takes about nearly 60% of the revenue. Right, for US is about 47%, 48%. Right, so and gross margin is 1 minus, right, cost of goods sold, right, over revenue. So Taiwan's cost of the gross margin is much smaller than those of United States. That's why it's priced lower. Now, if we look at TSMC. TSMC has, just comparing TSMC, Qualcomm, and Intel, right? We can see that TSMC has the highest cost of goods sold as a percentage of revenue, which means it has lowest pricing. And even with that, even with such high percentage, the highest percentage of cost of goods sold, its net margin is the highest, which is 38%. Right? And let's look at Qualcomm. Qualcomm is the opposite case. Right? Qualcomm has the lowest cost of goods sold, which also means highest gross margin and highest pricing, right? But it had the lowest, right, net income, 22%. It's still great, right? But comparatively, it is the lowest, right, in terms of profitability. And Intel is in between. And here I like to point out, right, if you look at Taiwan TSMC carefully, right, it has two major parts, right, in revenue, which is cost of goods sold and net income. And it squeezed everything else into a very small portion, right? The SG&A cost is only 2%. And compared with Intel, with Qualcomm, it's much smaller, right? Now, I also want to point out it doesn't spend as much on research and development, only 8%, right? Qualcomm is about 25%, and Intel is 17%, right? But Apple is going to hire Qualcomm, right, not to do research and development, right? It's hiring TSMC to do manufacturing, right? So this may not matter that much. Okay, make sense? All right. Now, the information we just discovered actually can be very helpful for us, for Apple to negotiate the price with the suppliers. Right. The reason being, when you negotiate with suppliers, right, you need to. And there's the two prices you have to consider. Right. And the first price is the supplier's expected price, and the second price is really the supplier's bottom line, right, at which the supplier cannot further concede. Okay, and the expected price is typically determined by the supplier's gross margin. So you look at the gross margin, that probably tell you what they expect to make, right? And of course, the bottom line is determined by suppliers' net margin, right? If they concede more, they're going to lose money, so they're going to stop right there, right? So using these two, understanding these two, you will see why pricing with the Taiwan semiconductor manufacturers might be more attractive, right? Let's see, the Taiwan semiconductor manufacturers may expect a lower pricing than those in the US, right? Because if you look at the gross margin of Taiwan, which is 1 minus this cost of goods sold, right, is, let's say, at least 10% smaller than the US. That means they're going to expect a lower pricing in general. And even with that lower pricing, they can concede more because their net margin is higher. Okay, so in plain words, right, the Taiwan semiconductor manufacturers, right, is they can offer you a lower pricing initially. So they already have a lower pricing, and even at that, they can concede more. So isn't that a good deal? All right. Now, what I just showed is a snapshot in time. Okay, so let's look at a trend over time to see if the observation, right, is true, right, throughout these years. Maybe just accidental, right, just 1 year. The trend analysis of gross margins and net margins of these manufacturers, semiconductor manufacturers, over time actually confirms our previous observations, right? You see this in terms of gross margin, right? So Intel and Qualcomm, right, constantly have the highest, right, gross margins, and also pricing, right, over time, right? Indeed, actually, Qualcomm raised its price more, right? Qualcomm's gross margin increased beyond Intel in recent years. Now, for TSMC, the price was lower, right? It used to be actually even lower, but it was raised recently, right, a bit. Now, let's look at net margins, right? And TSMC has the highest net margins consistently, right, which is in red. And if you look at net margins of Qualcomm, right, it actually fluctuates a lot more, right, over the time. Intel is very stable, but it is less, right, consistently than TSMC. right? So what we just observed, right, from the revenue breakdown analysis is confirmed here, which is true, right, for all these years. Okay, now finally, let's talk about financial health, right? For critical components or critical parts, right, you need suppliers to have rock solid finance, right? You don't want them to bankrupt anytime soon. Okay, and to do so, you have to avoid a typical trap, which is a good time deal, but a long-term crisis. Right? This is true because some suppliers may seduce you, let's say, with heavy discounts on their components or on their supplies, right, to get you indoors. But once you are in, right, they may threaten you with bankruptcy, right, because if they cannot really make money, right, so they cannot sustain, and so you have to pay. And so to find out such traps, right, the best way is to do a data analysis on their financials, right, to understand their equity versus liability, to understand their debts, their liability and their risk. And that's what I want to do next. So let's first do a liability equity analysis of their assets. So as we did before, right, we're looking at semiconductor manufacturers from US and Taiwan. Okay, now let's just look at individual companies because that's revealing. So we can see that Qualcomm, right, over here has the highest non-current liabilities. That means long-term risk, which is almost 60% of their total assets. And this is different from everybody else. If you look at TSMC, it has the highest equity, 66%, and lowest liabilities, right, especially in the long term. Now, Intel is quite healthy, right? It's somewhere in between. It's quite healthy in liabilities and equity. And what's interesting is Global Foundries, right? Global Foundries right here, right? It has also one of the highest equities and lowest liabilities. So even though Global Foundries was losing money in recent years, it is still very healthy. It can sustain by itself. It has a lot of equities. All right. Well, almost come to the end. Here is the asset breakdown, a more detailed asset breakdown. Right? We can see that. So we can see their cash. We can see their property, plant, and equipment, which indicates their production capacity. Right. First, we notice that, right, TSMC has a lot of cash, maybe even the most cash among these suppliers, right, 24%, right, of their assets in the cash. And they also have nearly 60% of their assets in property, plant, and equipment, which implies they have a lot of manufacturing capabilities or capacities. Now, Qualcomm is the opposite case. Right, we still have a lot of cash, but if you look at its PPE, right, property, plant, equipment, it's just 10% of their assets. Right, it's really going to put this company in question in terms of its production capacity and responsiveness. Now, Intel is somewhere in between. It has adequate PPEs, right, but it's kind of running low on cash. And finally, if you look at Global Foundries, right, which lost a lot of money recently, right, it's actually quite healthy, right, in terms of cash, and it has the most percentage of PPEs. That means this company is building up its manufacturing capacity in recent years. All right. Now again, right, so a trend analysis is going to expand our insights over all these years. So we can see that, okay, so everybody looks healthy in the short term, right? Because the current ratio, that is the current assets, right, over the current liability is greater than 1. That means they can pay off the current debts, the short-term debts, 1-year debts, right? And everybody's liability asset ratio also looks healthy, except Qualcomm, right? around year 2018, this company ran into some problem with a liability asset ratio almost reached 100%, right? But later it actually comes down. Let's go see, right? So, and while other companies are quite healthy, right, for all these years, they remain constant. And if you look at long-term debt ratio, right, everybody is very healthy except Qualcomm, right, which has higher, right, long-term debt ratios than everybody else, right? So Qualcomm is still in a safe zone, right, but just not as healthy as the other suppliers. So we have collected, right, we have analyzed a lot of data and collected a lot of insights. Then we can put all these insights, right, into score sheets to summarize them, and then we're going to compare them side by side, right, to select, right, the best suppliers matching our selection criteria. Right now, this is quite meticulous work, so I'm not going to do it for every company. And here I just want to show you for one company, let's say, right? So remember our criteria, right? Innovative, technology, and technology, right? We have manufacturing capabilities and quality, pricing, right? Profitability, bargaining power, financial health, and mix and competition, right? So, and for each suppliers, right, we're going to rank, we're going to give them score, right, for all these criteria, right? For example, Intel has excellent, right, innovation and technical capabilities, right? And it also has adequate, right, strong manufacturing capacity and with excellent quality. So it's all excellent here. But pricing wise, Intel tends to have higher pricing, right? So let's say it's fair. It's now the best choice, right? For profitability, Intel was very profitable and stable, so it's also excellent. Bargaining power is poor because Intel is used to make its own chips, and it's not a contract manufacturer, right? So Apple do not have a leverage here. Plus, Intel is the biggest, right? Financial health and robustness, right? Intel had lower risk liabilities, both short-term and long-term. So it's fine. And finally, in terms of leaks and competition, Intel is not going to compete with Apple, right, on smartphones and so on. So we do the same analysis, right? Put all the insights together for each of the suppliers. And finally, we arrived at this summary score sheet, right? So we have Intel, Qualcomm, Global Foundries, right, TSMC, and Samsung. You can have as many as you want, right, for each of the criteria, for each of the selection criteria, right? So as we just said, right, Intel is excellent on innovation, excellent on production capacity, and so on and so forth, right? We score each suppliers on each of these criteria, and we can see that TSMC seems to have the highest number of excellent, right, in this list, and Qualcomm has the least, right? And TSMC have had even more excellent scores than Samsung Electronics, right? The only weakness of TSMC is bargaining power because it was growing so fast, right? In recent years, it has increasingly more leverage. But other than that, it looks fine. So finally, right, let's come back to CPU outsourcing for Apple's iPhone. How to do it right this year, right? The suggestion would be use TSMC as the main integrated circuit supplier and cultivating, right, Global Foundries as a potential supplier because of its strong manufacturing capabilities, its financial health, and so on, right? And spread some work to Intel, Qualcomm, and Samsung for their specialties. If they are good at some spatial area, so give them the job. And if you look back at what Apple did in year 2020, this is very close to what they did, except cultivating Global Foundries. All right. So let me recap. So first, I want to say that sourcing is heavily data-driven. So if you teach sourcing or if you work in the area of sourcing, data is absolutely necessary. right? And sourcing analytics can provide the intelligence and insights, right, to help you with sourcing decisions, right, such as discovering and selecting suppliers for critical items, right? So what you have to do is identify your needs and selection criteria. Then you gotta know your suppliers. You can use market intelligence, negotiating power analysis. I'm sorry, I wouldn't have time to cover this today, but I will be happy to share on the slides of this. And also supplier analysis. And in this way, you will know yourself and know your suppliers, and you will never lose a bargain. Any questions?